What's actually going on with Cardano? One of the OG smart contract platforms that took a long time to launch because of all of the academic proof that was done. It was not just quick and dirty how Ethereum launched. Now that it's been around for a while, the question is, what's the adoption? Does it make sense to continue holding Cardano, potentially even buying in? We're going to look at the data most people are not considering. We're trying to figure out where Cardano is headed from here. Now, the long-term chart is quite inviting because we have seen our massive rallies, subsequent dumps, and now we tend to be rather on the lower end. The price of Cardano is currently 72 cents. And so this is how most people look at cryptocurrencies, right? They just look at the US dollar chart, they look at this on a linear scale, things go up and down massively, but those kind of charts actually are not that useful because in the end we are interested in percentage changes, and a percentage change over here is almost 800%. A percentage change over here, however, is only 10 or 20%. So really we are not interested in the absolute number, in the absolute price. That's what's shown on a linear scale. We want to see this on a logarithmic scale. And now the vertical differences are actually percentage changes. So the vertical distances show the exact same relative performance. And this gives us a bit better of an idea where we are relatively speaking. But I don't think that this chart actually goes far enough, because when we buy a cryptocurrency, we've got all of that correlation within the market, right? When Bitcoin is going up, most altcoins go up. When Ethereum is going up, then most altcoins go up. But the same is true the other way around. So really, when we buy a cryptocurrency, we have to think in terms of opportunity costs. Does it make sense to buy Cardano over Bitcoin and over Ethereum in the long term, or potentially right now when it's very depressed, potentially? And to answer that question, we have to look at those kind of relative valuation charts. This is now Cardano relative to Bitcoin, and this seems quite cheap. Not historically cheap. We have been lower in August of 2019, but we are not high relative to the potential gains. The loss could be maybe 36%. The gains are in the multiple 100%. Here's Cardano relative to Ethereum. That's a bit less volatile. Here we have seen a bottom in June of last year. Here the potential loss is 48% or so, which makes sense because recently Ethereum is outperforming Bitcoin. There's all of those ETF inflows. Traditional Wall Street is now buying more Ethereum than Bitcoin. Now, the rallies in the past were all related to the fundamentals, right? It was about the technical development, it's what was launch of the platform, etc. It was about partnerships. But times have changed. It's not necessarily clear if the recent rallies are still related to news or something else. Let's have a look at the usage of the chain. Here's the capital that's locked up in Cardano over the long term. It's a measure called TVL, or total value locked, and this is now in US dollars. It goes up and down as does the crypto market. So a clean approach is to probably look at this measured in ADA, or in Cardano tokens, because many assets that are on the Cardano chain are denominated in ADA and are tied to the ADA price. And suddenly we get a chart that tells a very different story, a much more consistent story. We either see adoption or we see the shrinkage of the network. And unfortunately, since November of 2023, the growth has halted. The chain is not getting used. Yet we sometimes see those massive rallies, right? A 200% rally over here and a 62% rally over here. But it seems like this is not fundamentally supported. Have a look at the decentralized exchange trading volume on the Solana chain. This tends to be somewhere between 5 and 10 million per day. And this is really not much at all. Compare this to the Binance Smart Chain. Here we have billions of dollars of trading volume every day. And so the fundamental question is the valuation for Cardano currently fair? Is it potentially a good time to buy ADA because it's relatively cheap to Ethereum and Bitcoin? Or is the lack of current adoption a potential red flag? Even if something is not growing, if the price is low enough, it might make sense to still buy. Now, Cardano is the 11th largest cryptocurrency in terms of market cap. It's got 26 billion of market cap. And BNB, right, the token of the Binance Smart Chain, has 106 billion in market cap. So it's roughly 4 times larger in terms of market cap. But we've already compared the current decentralized exchange trading volume, right? That's 1,000 times larger for the Binance Smart Chain compared to Cardano. So if just decentralized exchange trading volume was the measure that it's all about, then Cardano should have 1/1000th of a price of BNB, right? It should be at 100 million of market cap, not at 26 billion. Really, I think what's going on here with the Cardano price and why we saw those rallies in the past is that the market makers and the centralized exchanges, they in the early days bought up a lot of the supply. They now hold all of the supply and sometimes they want to just get rid of some Cardano. And so to generate some attention on the token, there's simply some short-term manipulation in the price because volatility creates attention. If something suddenly doubles in the span of a single week, everybody is wondering what's going on. That kind of manipulation tends to happen with leverage. It tends to happen on the perpetual futures market, and then arbitrage bots balance out the price from the perps to the spot market. In the last 24 hours, we saw 330 million worth of trading volume on the spot market. On the perpetual futures market though, we saw 590 million worth of trading volume, so more than double. Most perpetual futures traders are betting on rising prices, so the longs have to pay the shorts. The funding rate is positive. It does cost money to get more price exposure to Cardano. Betting on falling prices of Cardano actually gets rewarded. The shorts get paid by the longs. And the trading volume on the perpetual futures is modest. It's not super high, it's not super low, but there is some correlation between trading volume and price. The number of liquidations is also somewhat balanced. It's not incredibly high or low. But the next chart that we're going to see makes me rather bearish on Cardano. And that's the amount of leverage, the amount of short-term perpetual futures capital that's currently locked in the token. Because perpetual futures money is fleeting. It goes from coin to coin and it is highly correlated with tokens like Cardano. Just have a look at the open interest, that's the line in green, and compare this to the Cardano price. It's highly correlated. As there is more bets on the price, the spot price tends to go up. As the leverage goes down, the spot price also tends to decline. And currently we are at rather high levels in open interest. And this is what I find so concerning. Once we see a delevering of that open interest, and once all those longs get liquidated, then there's a good chance that Cardano even falls below this long-term support. So I'm not really a fan of picking up the bottom here. The adoption of the network doesn't justify it. The relative valuations might, but there's simply too much short-term leverage in the price that could depress the price further. So I'm rather a fan of betting on falling prices, at least in terms of relative valuation of Cardano. There could always be a short squeeze, right? We could always jump very quickly when there's more manipulation, but we can avoid most losses of such a squeeze by using a very tight stop loss. So imagine you bet on falling Cardano prices long term and you're simply just adjusting your stop loss and you're making sure you do not get stopped out. There are these temporary rallies, right? 17, 18%. And so there's two potential ways to write this, right? Simply just betting on falling prices now, having a very tight stop loss to not get completely crushed during a rally like this, or simply just to wait for the next pump. And once we see that, once the next manipulation occurs, then enter at that point. And again, enter with a short, right? Not with a long. We don't necessarily want to buy an asset that long-term has no growth whatsoever. Now here's the problem with the crypto space. Everybody talks about the next 10 or 100x returns with the next small meme coin. But the issue is, if you bought any of those assets that are recommended in those videos, you very likely lost money. And that's simply because returns are concentrated in just a few winners. The vast majority of altcoins loses all the time. And this is all just preying on your emotions, preying on your greed. I'm trying to go a different route with this channel. I'm trying to figure out what are strategies that long-term make money, where we don't just pick the needle in the haystack, but where actually statistics are in our favor. You might have seen my analysis on moving averages, right? How the best simple moving average for Bitcoin is the 120-day. So we should buy Bitcoin whenever the price is above the 120-day SMA, and we should potentially sell it when it's below. So that's this line over here, the line in turquoise. I've been talking about this regularly on this channel, and it helped me very well to time the market to be out when there's potentially a correction and to be heavily invested whenever we are in a bull run. And so we get those back-tested results, but that's the problem, right? It's a back test. It's a simulation of how well did this thing work in the past, but there's not necessarily a guarantee that it works in the future as well. And then there are those other counterintuitive approaches, right? Where we don't try to buy the one altcoin that outperforms, but we rather bet on altcoins doing worse because of all of the expanding supply. I talk about this all the time on this channel as well. So for example here, right, this is Balancer, which had a very extensive supply expansion, and that then leads to Balancer going down over time. And then we also talk about how can we potentially reduce the risk that we don't get stopped out during those temporary rallies of 100%. And then we talk about potential relative valuation trades, right? Balancer relative to Ethereum, for example, underperforms more consistently, so we can bet on that going down long term. I made money with this regularly. And so this is then where it gets from simulation to actual performance. I personally have made money with relative valuation bets for a long time now. Almost 4 years, it's 46 months. And had I just dollar cost averaged into Bitcoin, I would have gotten this light gray line here as return. But because I also bet on very poorly performing altcoins to do worse than Bitcoin, I got the performance here in black. And so we don't just have a simulation, we also have actual returns. But again, that's just me, and that's not showing it live. And so I went one step further. I opened up a portfolio of 2.5 months of relative valuation bets, where I showed the members of this channel, what do I bet on? Where do I go long? Where do I go short? And over 2.5 months, that portfolio made 50%. So I started with roughly 40K and then ended up with roughly 60K. But then again, it's just myself again sharing my performance, sharing my trading. It doesn't necessarily mean that you can achieve the same as well. I'm trying to be much more transparent than all of those other YouTubers. I try to share strategies that genuinely work. I'm not pumping and dumping based on any money that I got from any crypto project. I never take any money from any crypto project, but still, this is just myself trading. And so this is then 3 weeks ago where I went one step further, where I changed something, where I said, okay, I'm ready to take money into a capital pool. I execute the trades, and then you get the exact same performance that I get. All the negatives, all the positives. And over the time, we are already in profit. We are now at 4.7% in profit. I started out with my own money with 100K, and various members also deposited quite a bit of capital. And so I was wondering, how can I provide most value? For the people that have a lot of time, but not yet that much capital, they should be able to learn those strategies, those relative valuation bets relatively quickly. They should be able to make money very fast. And that's what all those tutorial videos are for, right? There's a lot of tutorial videos in premium. Feel free to just binge watch all of this. There are two main videos that are absolutely essential. So that's using perpetual futures on Hyperliquid to bet on relative valuations. And it's this one over here, risk management with relative valuation bets. Because if you don't manage your risk, then using perpetual futures is a bad idea. So when you've got some time, but you don't have that much capital yet, then the monthly membership for 125 is for you. That's just for you to learn all the different steps. I share my own trades as well. You can copy trade me. I will also share my favorite trade with you. So in case that favorite trade will not make money in the next month, then I will also refund you the $125 per month. So it's basically risk-free for you to enter this membership. But in case you don't have time to do the copy trading, in case you don't want to watch the tutorial, then you should probably go with yearly, because over here you get access to the automated copy trading, where we are so far in profit with 4.7%. And while I cannot guarantee that this will continue to stay a profitable strategy, I feel quite confident executing this for the members. Again, because I have very positive experience with that for the last 4 years. And it's not just because of random bets, because I got lucky with a small meme coin that 100x'd. It's because we use the market structure to our advantage, right? When the early investors and the team cash out, when they dump the price because the supply is expanding, then we make money at the same time. We basically flip a chart like this, so that it looks like this. This is the kind of performance we are looking for. And so for the annual members, there is the copy trading mechanism. You just have to watch a single video, 18 minutes in length. It shows how to send the money to that pool. The average deposit is around $13,000. So if you only have a few $100, then the annual membership is probably not for you if you just do this for the copy trading. But if you've got 5,000, 10,000, potentially more to deploy into a risk-on strategy, then feel free to check it out. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!